It'd help if I was unmuted for myself. Yeah, I'm seeing the same thing from the fundamental perspective. And guys, you just need to go back and watch the last couple of weeks of our streams because it's exactly what we've been saying. So we're going to cover that in a little bit here with our death by PowerPoint. But yeah, where are you guys coming in from? Yeah.
Looks like I had my mic muted here, but
Oh
there
no,
was
they're talking about me.
no. It was my mic is muted
Oh,
on the
jeez.
stream, but you came through just fine. Besides, I had nothing to
Ah,
say, right? I have nothing of consequence to say anyway. So
all right.
okay,
Let's just do it over again.
all right, yeah. Welcome welcome to Ready Set Live for 23rd of October. We have Doc here from Greenville, South Carolina, and we have Mav from Los Angeles, and we got people from all over the country. We got UK, Wisconsin, Amsterdam. We have Granville, Ohio. We have Norway, Marbella, Spain, Boston, Massachusetts, Canada. Another person from the UK, a third person from the UK. We have all kinds of UK Brits and mortar coming in today. Well, we got a little bit of a crash today, and this is something that we've been kind of expecting for some time. What happens now is the important thing. So, Mav, you got anything today? Do you want me to go straight into the charts?
Go into the charts. I think that's what people want to see.
Okay, we shall go into the charts. All right, so you're gonna disappear, man. So wave goodbye. All right, so here's I've got actually four things to show you guys. So first of all, volume profile has been really important. So what you find is that volume profile, the price tends to move in between these high volume nodes on volume profile. And so once we got down to the 8,000 level and set up the bear flag, then we're expecting bear flags are normally a halfway house. So if you can view the bear flag here as a halfway house, you have the initial move down, and then you have a measured move, which is approximately the same as the first move. And that would put it right down here at the next high volume node. So that's one view. That's one possible outcome for this, is that we're headed for 6,500. That is not the only outcome though. So there's a lot of different ways that we have to look at this. And then I'll finish out today with what we have to see to get a reversal. So that's one outcome, is that we have bear flag, halfway house, 6,500 volume profile. The other thing that we can look at here, and this gets into chart patterns, and this gets into, that weird alchemy that is price patterns. But if you look at this very carefully, you've got essentially what amounts to a head and shoulders pattern with a defined neckline. Okay, so awesome. What does that mean? Well, normally what you have is a downside target, which is basically the distance from the neckline to the head. Okay, so if we extrapolate this out, and if we place that measured move at about the neckline, okay, we have a move down to about maybe 7,000. Okay, do you guys see that? That's the distance from the neckline to the head, right there. Okay, so that's a measured move down to about 7,000. Is that guaranteed to happen? No, there's no guarantees when it comes to technical analysis. It's just an approximation. A lot of times that we've seen this measured move is approximately the size of the neckline up to the top of the head formation. Okay, so that's head and shoulders. We talked about volume profile. The other thing that I looked at, and if you see this odd looking curve here, this is something I've been doing with the statistics on the option chain. So this is the expected move into tomorrow. So the options that are expiring on October 25, which is on Friday, kind of like Thursday night, Friday, right? Have an expected move that goes down to about 7,400. And we're right at that level. So what we found in the equity markets is there tends to be a little bit of support and resistance at these expected move 1 standard deviation levels. So that's kind of the third way that we can look at this, but obviously this doesn't go out to something like if we pull this out and go to the end of the year, we have a much larger expected move for that into the end of the year, and that has a downside target of about 67.50. Now this was all based on the volatility that was about a week ago. And obviously the volatility right now is much, much bigger. So we're outside the envelope. So we've made more than a 1 standard deviation move to the downside for this. So the question is from you guys, I haven't been reading the chat here while I've been going through this. I'll get to the chat here in a minute. And then I'll bring you back to Thor over here. Is the question a lot of you guys are going to be asking is, how do we know when this bottoms out? How do we know when this bottoms out? Well, I don't know where it's going to bottom out. I can't sit here and predict, and it's going to be a waste of your time if I do that to say, well, definitely it's going to bottom out down here at 6,500. Nobody knows the future. Nobody knows the future. So what we can do, though, is we can look for certain telltale signs. And one of those is going to be a hammer candlestick. So bottom reversals are fairly consistent when we see something like this, a hammer candlestick. What that means is over 24 hours, the price pushed all the way down, and then somebody bought the hell out of it all the way back up again. It ends up with a very small real body. Sometimes we have a little bit of an upper wick. It doesn't really matter. But what we're looking for is a very small real body and a huge tail, downward shadow on this thing. So what this means is the price went a full round trip all the way down, all the way back up again, with a nice waterfall decline. So a hammer candlestick is going to be one sign that we're going to look for on here. Is it going to look exactly like that? No, probably not, but this is a rough approximation of what most hammer candlesticks look like. So look for something like that. Now, hammer candlesticks always need to be confirmed when they occur. So one candlestick does not a reversal make. It's got to be confirmed. You got to see additional upside on there. The second thing that we're going to look for is you want to see Mongo volume, big time volume, similar to what we saw here, which led to that bottom reversal and a blast back up again, and that was back in June, right? You want to see big time reversal volume. That means that there's a huge argument at that price, and somebody's getting bent over, somebody's getting pounded. Right? That's what you want, is you want big time Mongo volume down at the bottom. And that usually means that somebody is capitulating. Somebody is like tossing their cookies and saying, that's it, I can't take this anymore. And it usually, what we're going to look for is we're going to look for the shorts to lever up. We're going to look for the shorts to lever up down here and say, this is it, this is the move. From 8,000 down to 0 for Bitcoin. And we want the shorts to think that. And we want the institutions at some point to step in here. And this is the type of move that we'll see. Bottoms are an event. Tops are a process, but bottoms are an event. And this is what we're looking for, is we're looking for that event to cause that hammer candlestick on big volume and a short covering rally that just bakes them to death, right? So if you want higher prices, maybe you don't. Maybe you want lower prices. Maybe you're completely and totally BitMEX short right now. But for most of you out there that want higher prices and want some kind of capitulation, this is a sort of slingshot move. You can think of this as the rubber band being pulled back and then being released. And this leads to what we typically call the slingshot move to the upside. So there we go. Those are the 5 things I want to be looking for in the near term. So what happens next is really the important thing. This is a measured move. It's a bear flag, which broke to the downside, or it's a head and shoulders pattern that broke to the downside. Okay, so far so good. What happens next is really what happens for the rest of this year. And so with that, I'll pass it over to Mav, if anything you got, and I'll read the questions.
Yeah, sorry there. All right.
You got a drinking problem.
I do. Drinking and thinking problem. Yeah, so let me throw it over to good old PowerPoint here.
Oh my God, PowerPoint.
Is that working okay? PowerPoint crashed.
We
Had
don't
some
see
issues in the
yeah,
past couple
we
weeks.
don't see any PowerPoint yet.
Oh no. Oh, that's right, because I have to share my screen. This is always, I've got to come up with a better way of doing this. All right, let's try this again.
No,
Okay.
don't forget you're on the right hand side so we can see you. Don't do anything
Okay.
embarrassing.
All right. So working okay? Let's see, make sure this.
Yeah, it looks great.
All right, cool. Okay, so wow, going the wrong way. Um, the astute viewers, the recurring viewers, will notice that this is the same title I used for last week's slide about what's going on, and this was the question we were asking a week ago: is a crypto market coming back? The bull market coming back, or are we in a bull trap? And clearly, we've gotten our answer, at least in the short term. So, what's going on? What's driving this? This is also another reuse slide from last week, and this sort of set the stage for what we're seeing this week, which was that there's a lot of fear going on right now with Libra. You've got the founding members dropping out like flies, or rats. I don't know, whatever the metaphor is. Or simile, yeah, whatever. But anyways, there's a lot of regulatory concerns right now. There's a lot of structural concerns. There's just there isn't the enthusiasm or any of the hype that was launching with Libra right now. It's all about fear. And that really came to a head today as the Zuck was in front of Congress, and I got a little bit of that testimony, but it was pretty dry, and there was some pointed questions that were kind of biased. Whatever. Clearly, it was not a good look. It was not. There was no the fears around cryptocurrency, the fears around this being a power grab, the fears around Facebook and privacy and all that sort of stuff. It just exacerbated a lot of that today, and unfortunately, Zuck's hairline didn't
What
help
is
with
that on top of his head?
Well, apparently, when you're worth $70 billion, you can still get a bowl cut.
Oh my God. You can't be serious. Did you Photoshop that?
I didn't know. I'm pretty good at Photoshop, but like, no.
Does the
Twitter
guy ever
is-
smile again? I mean, it's like the guy just looks miserable.
he's like the epitome of like profile pic, where like you look him up online, he looks fine, and then in real life he catfishes people with the bowl cut. Oh man, we're getting off topic here, but yeah, Twitter is just
Dude looks
roasting him alive
miserable.
right.
I bet he-
I'm gonna have to
Is there
move on.
anybody that Twitter doesn't roast?
Yeah. Yeah, I can't stop looking at the haircut. Oh man, I can't take this serious anymore. I got the giggles. Anyways, the Libra is not looking good, and unfortunately, in the short term, that falls onto Bitcoin because unfortunately, the larger market has a hard time distinguishing cryptocurrency, true cryptocurrency like the Bitcoin space, the crypto space, from the corpo currencies, the Libras, and what will eventually be many more of these I would say corporate cryptocurrencies or blockchain light solutions. Um, he made some interesting comments here. I highlighted one where like he claimed that people trust Facebook. He claimed that if Libra launched and it didn't have a good reception, or it was premature, that they would just abandon it. It's just not a good look for what was and they also just have completely gone back on this whole. I had, when they released their white paper for Libra, I had to give it out to them. Like, it was a really good summation of some of the core thesis of why we're pursuing cryptocurrency in the world. It's about financial freedom. It's about banking the unbanked, and going into the just helping the underdeveloped portions of the world get access to modern financial services. As much as I wanted to criticize the overall Libra approach, that aspect of their white paper, I thought they did pretty well. But Zuck basically came out today and said, "Nah, we haven't really done any of that. That really hasn't been a focus of ours. It's been more about like the revenue, and it's been more about the proliferation of how many people we can get Libra in the hands of, in terms of like merchants and things of that sort. So, anyways, it was just a very bad testimony. It was not a good look for Libra, especially, but unfortunately, that reflects on Bitcoin. So, anyways, not to boil the ocean here, but it's clear that Libra isn't the adoption super case that some people were hoping for. I never claimed it was going to be, but some people put the same sort of hopes and dreams into Libra that they were putting into the ETF and backed. And here we go again. We get this hype cycle going up, and then we have our hopes and dreams dashed to pieces by the man. It comes back to we have to understand that adoption and the building up of this space comes from within. So, anyways, moving along. Another thing that came out today is if Google officially came out and said that we have achieved quote unquote quantum supremacy. They accidentally put up this paper a couple months ago, so this headline was out, but now they've officially confirmed it. What it basically means is that they used a very catered test where normally a computer to solve this problem would take 10,000 years, and they were able to do it in a reasonable amount of time. I can't remember if they were using 54. Yeah, I think they were using 54 qubits with one of them turned off. The problem is, this is what we're still seeing from quantum computing is that it's extremely expensive, and I think the fears that surround it regarding its ability to quote unquote break blockchain are completely misfounded, because it kind of negates or doesn't look at what blockchain is, it being an open source platform that can scale or build into many different solutions. So yes, quantum computing is coming in some respects, but I don't think that where the fears are right now are in any way justified as to, oh, it's just going to nullify Bitcoin or something like that. We're not even close to that with quantum computing right now. So anyways, I also want to mention, this is another couple, these two are recycled from last week, but we are seeing that Ethereum among the top 10 is basically holding out the best today between it and Stellar. And I think that goes to show the value of quote unquote working capital, where there's a lot of capital. As I pointed out in the DeFi slide here, there's a lot of capital locked up in the DeFi ecosystem that is working. And just because the price is going down, you don't want to stop. You don't want to pull your Ethereum that's on compound out, or you're doing the maker stuff. You don't want to you don't care about the short-term fluctuations because you're out there lending it out. So anyways, it shows that Ethereum is maturing as a platform to me, and it's just reinforced over and over again. But we're still years away from that taking off. So anyways, I need to move on. This is another reuse slide. Again, the longer term perspective for Bitcoin is still there. Halving is part of it, but it's more about taking the long term approach to where we're going, the long term investment horizon, and not worrying about what it's doing in a day to day sense, or what is bringing down the overall space, because we've seen over and over again that this is just what this space does. It has fluctuations like this, it has volatility, but that's okay. The long term trend is still intact. There is some claim that there's Bitcoin interest fading. You can draw to the sentiment right now is just kind of down going into the final quarter of the year. So you do have to take that into account. It is a battle of perception and optimism right now, and unfortunately, the digital asset space is just not exactly the hottest right now. That goes without saying, but here's the quantifiable data to back it up. But this is another reuse slide from a couple of weeks ago where we talked about price doesn't equal value, and that's something that if you stick around, you should know. This is kind of compounded by this quote where from Warren Buffett, who I know is not a Bitcoin fan, but you have to respect his ability to read markets and look to the future. He said, if you expect to be a net saver during the next 5 years, should you hope for a higher or lower stock market during that period? Prospective purchasers much prefer sinking prices. So this was the capstone slide from last week, and Yeah, I think I was right on the money, guys. There's a buying opportunity, roughly between 6,200 and 8,200. I don't want to make that defined, but it's we're clearly right in the middle of that right now. So sure. Uh, and what's important, as I pointed out last week, is there's seasonality to Bitcoin's price, and over time, in the majority of the years of Bitcoin's existence, we've seen it go up in price between October and January. Of course, as I talked about last week, that wasn't the case last year, and so we do have to acknowledge that. But uh, we're just in a different market now. There's different reasons moving things along. Remember that last year that was coming out of a lot of ETF hype, and the back wasn't really launching, and just it was kind of a dry market. We're just in a different space now. There's different factors at play and things of that sort. So yeah, this was just kind of talking about the seasonality of things. We also, as I talked about last week, we also have to look at the gold sort of situation, and that even though the gold has gone down in the past couple months, ETF buying of the gold ETF has gone up. And here's a new slide for today. Gold scores the first gain in 4 sessions. The most likely catalyst for the next gold rally will be a risk off event in financial markets, such as a drop in stocks and a rally in US Treasuries. Overarching concerns over the state of the global economy are expected to keep gold elevated going into next year. What we've seen throughout this year, this is the different narrative that I was just talking about in 2019 versus 2018, is the comparison from Bitcoin to gold, digital gold, safe haven asset. And guys, I think this is underpinned by this slide I'm a little bit proud of. Um, we've got chaos in the world right now. This is just, if you've been paying attention to the news the past couple of weeks, it is unreal the amount of protest, of unrest, of just sort of angst versus the system. If anyone plays Warhammer 40K and recognizes Corn up in the top right there, thanks. But like, that's the thing, is like, we are in such a period of unrest right now. There's so much in terms of people's just, they're not happy with the way things are going, and that's reflecting poorly on the global economy. We saw that Germany's possibly slipped into a recession. Hong Kong has gone from what was expected to be a 3% growth GDP year to now they're in a negative percent growth. Chile, Lebanon, Ecuador, all having massive protests. Iraq, um, Barcelona, Catalonia. It's crazy out there right now, and I think it draws from four principal reasons. Those being inequality, corruption, political freedom, and climate change. I would say crypto is pretty relevant to the first three there. And as we are seeing more and more of this energy building behind people's just disinterest or dissatisfaction from the current state, the status quo of the economy, of our institutions, regarding inequality, regarding corruption, regarding political freedom, regarding climate change. The fact that they just don't feel like they're being heard, that the system doesn't benefit them, or they feel left behind. As more and more people feel like that, there's going to be clamor for alternatives. There's going to be clamor for I don't want to say revolution, but moving towards some sort of evolution of our systemic ways that we do things. So Bitcoin benefits in this situation. That's the easiest way to say this. This is another reuse slide from last week as well, and it's totally relevant still. As expected, prices have corrected, and we're going through just this sort of contrarian phase. But the thing is, the smart money looks to an opportunity like today and sees it as an accumulation phase. And of course, I said this last week, so of course you can call me out and say, well, if you said accumulation at 8,200 and now it's at 7,500, you are clearly wrong. Okay, I'll take that in some respects, but to me, there's really not that big of a difference if I'm accumulating at 7,500 or 6,200 or 8,200. In the end, if it's an asset that I anticipate is going to appreciate 20K, 50K, whatever, to me, there's no big difference between buying Apple at $40 or $50 if it's going up to 200. I don't know, like it's the same thing. So yeah, sure, there's the prize for catching the falling knife. Good job. But for the majority of people, you don't have to overthink this. You have to understand that this is an asset space that is growing, is appreciating, and the macro forces right now are so much more important. That's what you need to be paying attention to, more so than, oh, when is altcoin season coming back? When is the bull market coming? No, what is going to dictate the future of this space over the next couple of years is, as Doc was talking to, some of the institutionalization that's coming out, but also just some of the macro forces at play, some of the vacuum of influence and sort of processes that need to be. We need something to fill in the void as we see central banks print more money, race to the bottom. People feel dissatisfied and not included in the system. So they're going to be looking for something that better represents their morals, their ethics, what they want to see in an economy. It's not just Bitcoin, but it's the principles that Bitcoin was founded upon. That is what's going to be appealing to people, and that's why it has served as a hedge against global chaos. So, anyways, hope that was kind of enlightening, and it's just a narrative we're going to be reinforcing over and over again because this is the thing. I'm fully convinced of it. One other thing I want to talk about before we go is, in a time of uncertainty, you need to be what I call financially independent, or you need to be pursuing financial independence. It's a lifelong journey. It's not something that happens overnight, but it talks about, it's the principles of, becoming debt free, of, getting out of this rat race that so many of us find ourselves in. And, it's going to be a great position to be in as we move into a world that's more and more defined by chaos and uncertainty, more and more defined by risk assets and risk in general. You need to be moving away from debt. That's the pretty easy way to talk about financial independence. Financial independence is essentially not being dependent on a job. You need multiple streams of income. You need a way to just remove yourself from the system so that you aren't with the rest of the people who are going to be, unfortunately, going off the side of a cliff like we saw in 2008. Um, we just don't want to go through that again. So there's 5 principal reasons why I think someone should be pursuing financial independence. It's a health check of your finances, making sure that you're doing okay, staying on top of your stuff and not sweeping it under the rug. Stop money worries and that you have to pay off the bills and things of that sort. That you're missing out, or you don't have enough time, or you're married to your job. Finally, just having the freedom to do what you want, to live the life you want, to live out your dreams, and stop being in this constant state of like, well, I hope my shitcoin moons, I hope I'm able to get that promotion. Guys, I understand it's a compelling vision or dream, but like at the end of the day, that's not going to help you get ahead unless you get very lucky. And what I'm seeing is that we're moving towards a state that it's going to be harder and harder to get lucky like that. It's going to be more about who can commit to sticking to a disciplined goal and seeing it through. So that's why I'm proud to announce that we just launched our biggest class ever, Financial Independence, 101 steps, and it literally is 101 modules. It is 7 hours of content because we go through everything regarding expenses, savings, investments, you name it. It's in there. It's co-taught by Doc and I, as well as a guy named Glenn, who is a registered financial advisor, fiduciary, who's also graciously offered to give 20 minutes of free consultation to anyone who signs up for this, regardless if you want to have a financial advisor or not. He just wants to sit down with you and say, how you doing? What do you need? What are you looking for? And hopefully this class can start to help you move in that direction where you're better able to define those goals and work towards them. This is something that we know is sort of ancillary to the crypto space. It incorporates crypto a little bit, but we feel that it's important for people to look at their overall finances and use crypto as a tool, but not make it the end all be all. And it's part of our broader vision of where we're taking Ready Set Crypto. So if you're interested at all, please visit us at readysetcrypto.com/freedom to get into this, as well as we also have our Omnia service, which is sort of all you can eat. So if you'd like to sign up for that and have access to all of our courses, that would also be an option.
Hey,
So,
Mav,
anyways,
do Omnia members get access to this course?
yeah. So Omnia members get access to all of our courses, including this one. So they already have access, and they've already been digging in and telling me what I need to do or how to move things. It's great. I love our Omnia community because they're really involved, and we're in there every day. We've got a private Discord, so we're talking about the markets, we're talking about trades and things of that sort. And part of that is what do you guys want classes built on and things of that sort. So we're really engaged with our Omnia community. It's something I'm really proud of. So anyways, let's get back to you guys. Let's talk about how you're feeling and some questions you might have. We're gonna keep this pretty short because we've kind of made the question and answer section a little bit too long sometimes, and people get kind of mad at us for not addressing their coins. So
I'm
we'll just
gonna do a couple of follow-ups here.
all right.
I'm gonna grab the screen and there we go. So somebody was asking about Chainlink. So Chainlink is certainly in a pretty nice trend. Now we talked about this one last week. We said that more than likely the price is going to come up here to 38,000 and form a cup with handle. That's usually what happens with this type of thing. So you can see this is a nice weekly uptrend. This is one of the few assets that's actually uptrending right now. It still has energy on the weekly chart, believe it or not. The daily chart, look at this. Range contraction leads to range expansion. Once it gets up to this level, the yellow line gets up to a high level, you can view that as almost like a fuel gauge, because random price action like the consolidation like that, what it does is you can think of this as just sort of like winding a spring. When you see price action like this that's slightly declining, oh, by the way, this is a bull flag for those of you that know. So this builds up the energy up to this level here, and it's almost like a pressure cooker. At some point it has got to move. And normally, most of the time, like around 80% of the time, it usually will break in the direction of the larger trend, which, as we pointed out on the weekly chart, was to the upside. So that one looks really good right now. I wouldn't chase after it right now unless you want to get a pullback entry. But yeah, that's one of the few that's looking good. And of course, one of the reasons why it's so strong right now is it's got Bitcoin in the denominator. And Bitcoin, if it's going to sell off like this, right? So as long as you've got an asset which is semi-strong, you're going to see some pretty good movement from it. Okay, so, but that's not the case with all of the altcoins, because a lot of them are just getting dragged under, like almost like when a ship goes down, you got to get away from that ship. Otherwise, this suction will pull you under as well too. And this is what happens with a lot of the altcoins. Somebody was asking about on Bitcoin about, let's get rid of this guy here. We don't need him. Right there. Okay, so somebody was asking me if there were any other, let's go to the volume profile in here. Are there any other intermediate levels before we get to 6,500? And to answer that question, what we have to do is we have to look at this, and the problem that we have here is, okay, so there's 6,500, and there's our nice little pop. When we have price action that's like this, where it just rips to the upside, a lot of times we don't create a whole lot of support from things like that. So there is at least a pivot here at about 7,400. So that's coming into play. And after that, there's really not much. So if 7,400 does not hold, next stop is 6,500. And as we found out, this can move very, very quickly within the space of a couple of hours. So that's the one thing with Bitcoin, is that once it's got energy built up, then it can move very, very quickly. This is why we talked this weekend about setting up perhaps like a straddle, something like that, where we had very low implied volatility and it's still actually fairly low. Okay, last question for you guys is basic attention token. So BAT.
I've been getting lots of bat from the channel, so appreciate you guys watching.
Yeah, so basic attention token versus the US dollar looking pretty good right now. I mean, we have a nice trend to the upside if we go to the weekly chart. This one's not that old, or at least on this exchange on Kraken. Let's see if there's anything else here. So let's see. Let's do BAT versus XBT. Yeah, that still looks really good right now. Now is this a good time to buy it? Probably not right now. As we're looking on the daily chart, we're into exhaustion. I would wait until this consolidates. So what I would look for at this point is some type of consolidation, which is going to move like this: range expansion, range contraction, wait till this builds back up again, and then this might be a nice swing to the upside. Okay, that's it. I'm going to go back here, back to your financial independence. And let's see if we have any other questions. Otherwise, we're going to, let's see.
Elias asked about Bitcoin halving or having. I always do that. Affecting price and when that will happen. If history has shown anything, we can expect a negligible difference at first. Oh, nice. Get that pulled up. Or did I do that? Oh. Followed by a possible price increase after the event. How much it will affect the price? Well, everybody knows it's coming, so there's going to be a degree of it being priced in. But what is I think the more sort of pressing way to look at this is the long term. So if we look at the supply having, if we look at the stock to flow ratio, if we look at the fact that the interest rate for Bitcoin now becomes lower than many of the developed currencies of the world, then yeah, there's a lot of reasons to look at the halving being something more affecting the price in the next couple of years. If you want to look at it the next couple months, sure. I would say once we get into 2020, it's going to start to drive some hype and some short-term volatility. There's going to be a very clear buy the rumor, sell the news kind of event leading up the couple months to it, and then a couple weeks after it. But anything can happen. Like I said, it's going to be more about the macro forces at play, because ultimately, think about what does the halving represent from a market maker perspective. What does it really do in terms of the space? Is it really just going to be people in the space trading it? Well, in that case, it's going to be just a short-term move. It's everybody in the space, but it like already knows about it. But if I looked at, I talked to some stock trader and said, "Hey, the Bitcoin's gonna do this thing," and then the halving and the supply is going to be reduced.
They need to put it in terms that institutions understand, because
Right.
when you have stock, there's only so many stock shares offered, right?
Right.
And it's called float. So when the float gets really small, you see the price go zooming up. So if we started calling it float instead of having, we might get a little bit more demand.
Yeah. Yeah. So I don't think it's going to drive a lot of external volume into the space unless the larger markets start to dry up. That's what we saw in 2017. We saw the parallel forces of the overall stock market. The S&P, the Dow were just kind of dry, the sideways down most of that year. Whereas crypto had a lot of enthusiasm. It had a lot of substantial hype behind it. The ICO was really hot. So if we see something like that again, where the market's starting to sell off, kind of like it did in Q2 of this year, and we see more of this emerging narrative of Bitcoin being a safe haven asset, and we have the hype surrounding the halving, then maybe we'll have a confluence of forces. But if it's just the Bitcoin halving and that's it, then I'm not expecting too much out of it. Certainly not like, oh yeah, that's going to be what takes us to 20K or 50K or 100K or whatever. Maybe eventually, sure, but not in of itself. So hopefully that helps.
Ooh, we got an Empire Strikes Back reference. Awesome. So I'm
Yeah.
I'm Lando Calrissian's the guy with the thing stuck in his head or whatever. Wow, it's not every day that you can come here and.
Oh man.
All right, let's see. Any other serious questions here?
Smart contracts will be important in 2021. Yeah, they're a good facet of blockchain technology. So sure. Slade, I like the idea of storing and lending money using things like Nexo, Compound. I remember getting started a year ago with Compound and getting like 18% returns on my maker, which was just insane. Certainly, that hasn't, we haven't seen that since. But we really have seen a maturity growing up of the DeFi space, and to be able to, take out a CDP and lend it out on Compound and to use Uniswap. To me, that still represents something really exciting in that you've decentralized retail banking. You've done what Libra is trying to do, but they can't because they're too centralized and bound by regulatory oversight. Whereas with DeFi, it's a lot more decentralized. There's a lot more risk involved. So to more adequately address your question, there is a lot of risk involved with those sorts of platforms. So I wouldn't be putting a lot of capital onto them, nor taking a lot of capital out of them. But at the same time, it's a really exciting opportunity because if you think that 6,200 is going to be the bottom that we see this year, or something like that, and then you lend out your Bitcoin, so you're getting a loan, you're getting returns on that, or the opposite, you take out Bitcoin and you try to get more of it, whatever, and then the underlying asset appreciates. Not only is your asset appreciating, but you're also getting the returns of it. So it's just you get to double dip. This is something we talked about a little bit in the financial independence class. It's like you have to find ways to make your money work for you. It's well and good for it to accumulate, to get some interest or whatever. But if you can be doing double dipping like that, that's awesome. That's you're going to be putting yourself in a really good position. Cool.
I think we're good.
Yeah.
All
Awesome.
right, everybody. Hey, I think I might be doing a public session on Friday, so watch for that. I'll be doing some.
Yeah.
Yeah, I think I'll do a live trade school on Friday
Awesome.
for everybody. So stay
Cool.
tuned for that and bring your chops.
All right.
All right, guys. Thanks
Stay
everybody for hanging out with us.
stay frosty, guys.
Stay frosty. There we go. Take care, everybody.
Cheers, guys.